Ladies and gentlemen, welcome to the Big Tech Frenzy. Oh, no, never mind. It's the earnings call. That's later on. I'm so used to saying the exact same words every single time I go live. We get a little distracted. That being said, we have earnings today, big earnings. Palantir, HIMS, Mercado Libre, Axon, Navitas. We have Simon Property Group, a bunch of other names that we probably won't end up getting into. But I am looking forward to Palantir, HIMS, Mercado Libre, and Axon. So I'm here to learn. I'm not the biggest Palantir, HIMS, or Axon shareholder. As I don't hold any of those names. I do hold Mercado Libre. Now, there's been a lot of conflict recently in terms of U.S. Regulation that might be hampering some of Brazil's potential growth here. Lots of tariffs, lots of additional tariffs, 40+% they're now talking about. So, hopefully things start to settle there. That's not the main focus of where Brazil or where Mercado Libre is set up. They're also an Argentinian business, Chile, Mexico, all sorts of different areas. So I'm interested to hear a lot about them. However, I think the earnings call that we're going to actually listen to is Palantir. Okay. They are the most expensive company on Wall Street in terms of a multiple, not even close to being debatable. And that one will be very interesting to see how they've done, what is leading to their future growth, where they're getting their multiples from, what Alex Chris has to say about the market and the Wall Street analysts and everything else that he's going to inevitably come out and say. So I'm very, very excited. Is this a leaked anticipated revenue of 991? A lot of people are assuming that it's over $1 billion. That's sort of the key number that people are fighting for right now. Alex Karp. Did I say Alex Chris? I meant Alex Karp. Dollar from Dookie. She says $15 left. Don't give away your 15 last dollars. Okay. Now let's get ready to jump in to a bunch of these companies. Let's first take a look at the stock to see how we are doing before this market closes. Palantir up 4% to $160.58. The highest they've been, $161.40. They could absolutely surpass this after we see earnings if they end up putting numbers that surpass people's expectations. Yeah, my bad. I didn't mean to say Alex Chris. I meant I did an old PayPal video yesterday. Got into to Alex Chris, who runs that company. I'm talking about Alex Karp here. HIMS is up to 63.20, 63.30. A little bit of a ways off there, 52-week high of 72.98. But potentially this earnings could turn things around. Their estimates right now are much lower than what we've seen in previous quarters. So as long as that they can surpass that, I think the market, Wall Street is actually looking for, let's see here. I think it was 540, something along those lines. 585 for revenue. However, I have heard that many people are actually thinking it might be lower than that, around 560. So if that does end up coming out that it's a slight miss, I'll be interested to see how the market actually reacts to that, as well as EPS estimates of 23 cents. We'll keep an eye out for that as well. Remember, we have the calls for these companies at 5 o'clock. They report numbers at 4 o'clock. We'll immediately start getting some of those numbers like HIMS, Mercado Libre at 4. Palantir comes out at 4:05. And Axon, I think, is also at 4:05. PLTR with the $50 donation. Have fun and good luck. PLTR, where should I put that money, man? We're putting that into the community portfolio. I think your name might indicate where you want me to put it, but also, if I remember correctly, you're quite a SoFi investor as well, so I'm not going to make that assumption. So let me know. HUT 8. Oh, wow. Wow, a little Bitcoin mining, eh? Canadian Bitcoin mining. Ticker symbol HUT. Wow. That I was not expecting. Take my 1300 and move it into AMD. From what? From SBET, and you have two separate ones that we've put in $1,000 on. You have $2,000 on, or 1,000 on SBET and 1,000 on SoFi. So what do you want to move? Half and half? All right. Mercado Libre also up 1%. Axon also up. Navitas up as well. There's not a single company going into this earnings, or at least the ones that we're looking at, that are down in the day going into this release. So very interesting. High hopes from the market. Also a larger sell-off from last week. So a little bit of recovery there. But overall, guys, I'm super excited. I love a Monday earnings day. We don't get them always, but sometimes. But Palantir will be the big name, up 4% on the day. This one's going to be the exciting name. And we'll get numbers here in the next few minutes. I'll be ready on that, as well as having fiscal AI up, which now they have a new update, which actually allows me to get the numbers in the first couple minutes. Okay, they actually use like Gemini to pull the data from the actual reports the second they get them, and then throw them up on their website. So I hope to get Palantir's numbers even as early as the Bloomberg terminals before the companies even release them. But I'll make sure to have Palantir's investor relations and HIMS and all them up as well. Now, the only company that I actually have a real stake in of this report is Mercado Libre, okay? Which is also the most contentious one that's probably being shown today. But I have high hopes for the company long term. So whatever happens here in the short term, we're okay. But I want to listen to Palantir because I think that has larger implications on artificial intelligence and that industry in general. And the comments that Alex Chris can make can heavily impact some names that are in this field. So I actually think that's very important. Look into HUD 8, actually buy whatever you want. Why? When will we get any Shift 4 updates from you? Shift 4 actually does earnings tomorrow morning. I will most likely be live for that, as well as Lemonade. That's tomorrow morning. And then at night, we get Upstart, Toast, AMD, Opendoor, Copang, SMCI. So we'll be live for that as well. But what call to listen to? Probably AMD, but I want to listen to the Upstart call so badly because I think that they're going to show off some amazing things for SoFi and other lending companies that I like. So I've just heard amazing detail from them recently that they are going to show a pretty significant quarter upcoming. I'm not betting on Upstart, but I do care about it for the companies that I am betting on. Let's look at the minutes chart here for Palantir as we get into this close here and see how the market closes on this company, getting ready to hopefully pump into even higher all-time highs, which is incredible because, to be fair, I love Palantir, but it is an expensive company. I don't think there's much denying that. So still very interested to see how they end up doing. Okay, let me get their investor relations up here so then we can get the report as fast as they release it. And hopefully Fiscal AI gives us it even faster. Palantir to 1,000 PE. Well, we're only 300 off. You know, whenever we get to see this earnings and the more mature this business gets, that will actually bring down their price to earnings ratio. But if you're a Palantir investor, bringing it up to 1,000 P will be good in the short term, but obviously companies don't usually stay at those types of prices. So might need a small bit of a pullback there. But you are right. Like, I mean, we're looking at a PE of 700 times right now, market cap of 380 billion going into the close. Does it close above 380? I don't think it does. And the market has closed, ladies and gentlemen. 160 and 66 cents. Palantir is going high into these earnings. Expectations are set high. Mercado Libre's expectations are set high. HIMS, Axon, Navitas actually dropping into the after hours. But good luck to all. If your chips are in, your bets are set. Let's see what is reported. If anyone gets the numbers before me, let me know in the chat. But do not be deceived by people that end up putting in numbers that might be fake. Let's go ahead and you know, look at those numbers, enjoy them. But okay, we are running higher. 160, 160, 150. If the report is out, that's a new high. Palantir is running, ladies and gentlemen. Are we going to hit 162? Let's see. Don't have any numbers yet. No numbers, no numbers. But clearly, it looks like the market has something here that they are getting excited about. Pushing that higher. HIMS is flat. Melly's flat. Axon's flat. Palantir is up. Okay, let's see. Let's see. Still nothing from me. I have not seen a report just yet. Vertex numbers are out. They beat on the top and bottom line, up 6% on EPS, 2% on revenue. Those were the beats. So congratulations to Vertex. But what I care about right now is Palantir. Let's get some numbers. Come on. No numbers on their IR page just yet. It's supposed to be a 405 release. I'm just surprised about the release or the pump on the stock right now. Mercado Libre down 7%. That bodes badly for Nubank. Oh no. Oh no, that's the only one that I have out of this group of companies. Like I said, there was a real expectation that this could perform poorly. The macro has never been harder for them. So that I'm sure there was probably an EPS miss or something along these lines, or actually probably more along the lines of revenue. Because the thing is that although these companies are in Latin America, they report in US dollars. So the difference in the way that these dollars fluctuate significantly changes how they're going to report. So if the US dollar is very strong, it's actually really bad for foreign revenue. And if US dollar is weak, that actually means that the foreign revenue should look stronger. Now, expectations going into this, was it a little bit high? Not really. Revenue beat by 2%. EPS missed by 13%. Expected $11.89 of EPS. Well, we got $10.31. Okay. EPS was actually down 2% year over year, while revenue grew 34% year over year. Okay. Just looking at these initial numbers, I'm actually not too mad. Revenue up 34% year over year. This is a company that I want to continue to hold. I'll look into the numbers even more. Let's take a look really quickly at VRTX, and they are also down 7.7% on a double beat. There must be some guidance issues in there, commentary from the CEO. We'll get that here in a second, but we have to focus our attention on Axon right now, beating EPS by 45%. Expected $1.46. They got $2.12. Revenue came in at $668 million. Expected was $641 million, a beat by 4%. EPS is up 77% year over year, and revenue's up 33% year over year, climbing in the after hours, up 3.1%. Climbing even higher. Wow. Plus over 4%. Mercado Libre is trying to recover some of those losses. If you were able to buy that 7% dip, maybe that was a lucky entry here. Talking about Navitas really quick, down 12.7%. EPS was in line with expectations, negative 5 cents. Okay, so that was exactly what Wall Street was expecting. Revenue beat just so slightly. 14.43 million was expected. 14.49 million is what we got. I mean, that's not even a percentage. EPS was up 29% year over year. Revenue down 29% year over year. Wow. Big fluctuations in these stocks here, ladies and gentlemen. It's HIMS down 8%. No. Palantir up 4%. 167.50. The numbers have to be out. Where are these numbers? Someone give them to me. It's past 405. Let me refresh my data here. Oh my gosh. Does someone have it? Pal and frickin' Tier pulling back. Quick reaction to some top line numbers. We have some more data on Palantir. EPS beat by 14%, and they did the $1 billion, ladies and gentlemen. Beat by 7% on revenue, $1 billion, which was the high-end expectation. EPS of 16 cents. The expectation was 14 cents. EPS is up 78% year over year. Revenue up 48% year over year. The thing about fast-growing businesses is that if they continue to accelerate their revenue growth, now 48% year over year across the board on a GAAP basis, okay? If we have not found a ceiling on growth, that can continue to climb. There's expectations. There's Wall Street analysts that could model out for, 100% year over year growths. If you can't find the ceiling of how fast management can control this growth on this business at higher and higher, margins, Wall Street can take the valuation higher and higher. And this is what exactly we're seeing. Brand new highs on Palantir, even with a 700 times price to earnings ratio. Absolutely unbelievable. Let's go ahead and refresh my data and see if we end up getting it just yet. Not quite. We will keep an eye on that. HIMS down nearly 11%. Oh no. EPS beat by 6%. Revenue, yeah. Expectation was 552, came in at 544, which was roughly in line with what actually their own team said, which was between 540 and 550. So missed by 1% there. EPS up 183% year over year. Revenue up 73% year over year. Now here's the thing. Those numbers are unbelievable, and this could still be a fantastic company, but stocks trade on expectations, and people, although, you can bet on a company that's growing 183% year over year, usually the multiple corrects to that level of growth. Now, even then, their PE ratio is still 93 times before we ended up seeing this number. So this is considering the fact that they beat on EPS and have corrected over 10%. The valuation on that company is going to look a lot better post earnings. Palantir might even be a more expensive company, depending on where it opens tomorrow. But if it continues to beat everyone's expectations, maybe that is very deserving. So holy crap to the Palantir investors. Let's look out for more information on their investor relations. I'll see if I can get that for you guys. Nothing just yet there. I'll try to keep up with that. And also get, numbers on HIMS and Axon. So I got a little bit more details on Axon, which is one of the other companies that is up quite a lot on the day. Revenue up 33% year over year. Okay. EPS came in at $2.12. Expected was $1.46. Adjusted EBITDA up 37%. And full year 2025 guidance also had bump ups. They increased their total year over year growth for 2024 to 25 to 29% year over year growth. Their adjusted EBITDA should come in at $685 million, a margin target of 25%, and capital expenditures of $170 to $185 million. There, yeah, there's a lot of detail here. So in terms of, let's get some commentary from the CEO actually, and then we will correct, because I want to get more information on Palantir and make sure that we're sticking on that. I'm only going to touch on Axon really quickly here. We can get back to it later. Axon closed H1, which is the first half of 2025, with record revenue, our sixth straight quarter of 30+% growth, strong adoption of Premier software, and Taser 10 drone results. We're leading the charge on responsible AI and law enforcement, with 3 in 4 officers believing it will improve efficiency. Productivity tools like Draft One are saving officers 6 to 12 hours per week. That's a very real impact. And we're raising our full year outlook again, reflecting durable execution and long-term demand. Love it. That might be a name for some interested drone investors, security investors, these sort of places. Axon might be your target here. Let's get to Palantir. Palantir revenue came in at $1 billion, up 48% year over year. Adjusted EPS went to 16 cents, up from expectations of 14 cents. The rule of 40 hit 94x. That's or 94%, I should say. That's unbelievable. Forget the rule of 40, the rule of 94. That's insane. You're practically looking at a margin and year-over-year growth rate that both exceed the rule of 40 themselves. Crazy. On a segment level, what we end up seeing is that U.S. revenue was up 68% year-over-year. U.S. commercial revenue up 93% year-over-year. Commercial or U.S. government revenue up 53% to $426 million. That's absolutely incredible. That's beating people's expectations for sure. U.S. commercial TCV was up 222% year over year to 843 million. Customer count was up 43% year over year and 10% just quarter over quarter. They closed 157 deals greater than 1 million, 66 above 5 million, and 42 above 10 million, like actual deal sizes. That's crazy. Cash and cash equivalents of $6 billion, operating cash flow of $539 million, and adjusted free cash flow margin of 57%. Alex Karp had this to say. This was a phenomenal quarter. Our rule of 40 score was 94%, once again obliterating the metric. U.S. commercial surged 93% year over year. Our U.S. business overall grew 68%. We're guiding to the highest sequential quarterly revenue growth in our company's history, and our infrastructure is uniquely built to tether AI to the real world. Alex Karp. Congratulations, ladies and gentlemen, to those that are betting on Palantir. 168.21, 166.90 right now. But yeah, that's absolutely incredible. Let's try to find the report if it's released just yet. I don't see it on their website, however. Quarterly results. I only have the webcast. That's in 45 minutes. We will get the call up whenever that happens. PLTR said you have the free cash flow number. Free cash flow was, I've adjusted free cash flow of 568.8 million, up 283% year over year. That's crazy. Adjusted EBITDA came in at 470. The expectation was 410. That's an insane beat. Operating profit at 270 million. The expectation was 172. Stock is at 166.84. Just wow. Taking a look at Mercado Libre here as well. Yeah, it just looks like they missed on net income. It came in at 523 million. The expectation was 614 million. That's incredible. I'd love to read what the heck happened there. Let's also try to bring up their numbers, because I also want to see if that impact was from credit, because this has happened before. And it rebounded the stock really quickly because people realized that they had missed because of a lot of credit products, but they were actually just turning a lot of their higher return credit into more things like credit cards or secured lines of credit that have lower returns. So the market initially reacted, but it was a little bit of a overblown reaction, and they're actually doing perfectly fine. Let's see if Fiscal AI has any of the numbers here. Maybe for Palantir, if we can get it up 4% still. No, not quite. Amit posted a smiley face on on X, just showing that he is liking what he's seeing from a company that he's been following for quite some time. Congratulations to the Palantir shareholders. Another exciting, oh my God. Vertex down nearly 11%, 10.5%. Navitas down 13.5%. Axon up 3.7%. So the real winners here, guys, is HIMS and Axon. Everything else is big losers. VRTX, HIMS, Melly, Navitas, not good. Or Nvidia pushing higher in the after hours, up to 180.44. Incredible. Let's hear some commentary from HIMS, down now 8%. EPS came in at 17 cents. Expectations were 14 cents. Their subscribers grew by 31% year over year to 2.44 million. Monthly online revenue per subscriber is now $74. Wow, that took quite a jump up 30% year over year. Full year 2025 guidance was reaffirmed. So the midpoint was 2.3 billion to 2.4 billion. That could also be why it's down right now. Full year guidance just reaffirmed. Meh. Exact same thing for Q3. Came in just as Wall Street had expected. So that's, meh. Revenue breakdown. Online revenue came in at 536.9 million, up 75% year over year, while wholesale revenue came in just under 8 billion, down 10% year over year. Free cash flow came in at negative 70 million. The expectation was positive 57.6 million. Different. Definitely. I need to read into why they came in on negatives there. We're delivering exactly what millions have been waiting for. Personalized, high-quality care that meets people where they are. Our growth is driven by subscriber adoption of personalized treatment plans. We're investing in lab testing, pharmacy personalization, and international expansion. I know that they are coming to Canada, that's for sure. It's not a name that I personally hold. I'm definitely more of an investor in fintech and artificial intelligence. That's why I hold Mercado Libre, and I actually don't hold Palantir, but it would be a name that fit pretty well into the types of companies that I do like to follow. But I have a hard time stomaching the valuation, but Wall Street does not. They continue to buy up this company after continuous beats. I mean, whenever you see a company that reports earnings that is just green across the board after continuous quarters, I can see how you could stomach a high valuation if you think that this is going to be one of the largest companies into the future. That's a pretty easy bet to make. Yeah, U.S. commercial revenue came in, or they're guiding for 85% year over year growth on Palantir. That's what they're guiding for. I still don't see a letter from Alex Karp or earnings release or anything from Alex Karp just yet. Little bit weird there. I wanted to hopefully get that. Hopefully we get that by 420. If I remember correctly, it was late last quarter as well. But I could be wrong. Maybe Mercado Libre has their report out. We could just take a quick peek-see there. Nothing from them yet. Him's shareholder letter is out. Down still 8.6%. Let's see here. Yeah, net income up 220%. Adjusted EBITDA up 109%. Free cash flow, like I said, was negative. Man, that monthly online revenue per subscriber, though, is pretty freaking amazing. That is incredible. What are your guys' thoughts on the market to start here? Who is happy? Who is not? The letter is out, someone said. Let's refresh. Okay, I do have letter to shareholders. Okay. Yeah, sorry. All the value in the market is going to chips and what we call ontology, said Alex Karp. This is still only the beginning of something much larger, and we believe even more significant. Our overall business generated more than $1 billion in revenue for the second quarter of the year, a stunning 48% increase over the same period the year before, as we reach an annual run rate of more than $4 billion. Let me turn this into dark mode. It's so hard to read. The growth rate of our business has accelerated radically after years of investment on our part and derision by some. The skeptics are admittedly fewer now, having been devanged and bent into a kind of submission. We see no reason to pause to relent here. It has been a steep and upward climb as ascent that the relief of a remarkable confluence. Why can't I read this guy's language? Holy crap. Of the arrival of language models, the chips necessary to power them, and our software infrastructure, one that allows organizations to tether the power of artificial intelligence to objects and relationships in the real world. And our U.S. commercial business, the emerging core of Palantir and the seed of what the entire industry will become, perhaps the world's most dominant in the years to come, nearly doubled in 12 months, generating $306 million in the last quarter, representing a 93% increase from $159 million just the year before. For a startup, even one only 1,000th of the size, this growth rate would be striking. The talk of the town. For a business of this scale, however, it is, however, we continue to believe, nearly without precedent or comparison, the software industry for years will be judged by what many call the rule of 40, the view that the sum of the rate of the growth in revenue generated by compelling software firms plus its profit margin should be greater than 40%. Ours is now 94%. His writing, man, is unbearable. I actually can't say. Write like a human being, dude. With continued execution and a focus on what matters and near complete disinterest in what others do not, we believe that Palantir will become the dominant software company into the future, and the market is now waking up to this reality. The reasons for our continued success is many, but principles among them are willingness to foster an unapologetically specific culture within this artist colony of a company, to allow for plenty of friction and disagreement across a range of domains, yet remain unwaveringly committed to a set of values and an approach to building. So annoying how this dude writes. But yeah. I won't be able to finish that. That was awful. But obviously, he does believe that the strategy in the direction that they are going is the correct one, and that the market will continue to realize that as they continue to put up more numbers by improving the success of other companies' businesses, which, I mean, that's how any company makes more money, right? You make money for someone else, you solve rich problems, you get high valuations for that. So that's why they have broken into a new high, 166.70, taking them just a little bit higher. Holy crap. That's a past a 360 or $380 billion valuation. You could see this company get into, a potentially 400 or even $500 billion market cap soon. It's an incredible price to pay. But if you are betting on the next, Microsoft or something like this, like the next infrastructure layer for all of not only government technology, but also commercial, that's the software that you want to bet on. That's the next operating system. And I do like how, it's not going after the companies that I'm investing in, at least for the most part. But it does continue the advancement of companies like NVIDIA or AMD or the hardware layer that is still required, even if Palantir is the dominant layer for theirs as well, for the companies that they service. Let's see here. I'm trying to get up the actual report here, but I only have like the HTML version. I don't have the actual. Okay, I have the presentation now. Let's drop this for a second, head over to the actual presentation, for which, just look at that, eh? Let's try to make that a little bit bigger. Why is that small? Why is that doing that? Okay, this should be better. Rule of 40 for enterprise software companies with over $1 billion in TTM revenue. Well, okay, bro. Yeah. Anyway, rule of 80 frontier. Palantir lives alone, well above those other businesses, with an insanely fast growth rate at 48% and a margin that is, what would that be? 47%, 46%? Unbelievable. It is like 46%. It is, even as a viewer and not an investor, it's an unbelievably strong business. Rule of 40, top 25 market cap companies globally. NVIDIA, I mean, love it. But I do get it. Those are expensive companies to bet on. But yeah, I mean, the two companies to have bet on over the past little bit was NVIDIA and Palantir. And might continue to be. I mean, if they can hold up those growth rates, what's to say that, their valuations are anywhere near finished if, the commentary from people like Mark Zuckerberg or Andy Jassy, Elon Musk, all of these people say, hey, you know what? Artificial intelligence is the largest, largest technological change, and that there's going to be 10x, 100x the amount of infrastructure to come. Potentially, we're going to continue to push the bounds of what large market caps or even valuations on those companies can get to. And by valuation, I mean a multiple of earnings, which Palantir has always been expensive. But if they're one of the fastest growing at the best margins and they don't really have a competitor, that is very exciting. I mean, even NVIDIA, which has done so well historically, you can list off a bunch of companies that have that are going after their success. It's very hard to do so with any meaningful success to try to name who Palantir's competitors are. Transforming healthcare. Fannie Mae even uses AIP to accelerate mortgage fraud detection from months to seconds. This new partnership will combat mortgage fraud, helping to safeguard the U.S. mortgage market from lenders, homebuyers, and for lenders, homebuyers, and taxpayers. At AIPCon 7, our customers showed off how they were using Palantir to leverage AI at scale, like Lando Frost partnered with Palantir to revolutionize production planning. Production schedules used to take more than 40 hours to put together. This can now be done in 30 minutes. And we put the first application into production in 3 months, reducing the time it takes to clear candidates to the Foreign Service from 60 days now down to 12. Yeah. Which is the thing, right? I remember talking with some of the Palantir like Super Bowls that have, very high prices on this stock. And I said, if they can continue to show off these use cases that like in any industry, they are changing the time to market or the cost in which a business can go from A to B at quicker rates, then every company is going to be their customer and pay them whatever price that they want to pay if they can continue to show up these level of results. Let's get to some of the financials here. U.S. commercial continues to accelerate. Yeah. U.S. commercial customer count up 64% year over year, but the revenue is up 93% year over year. 12% quarter over quarter, 20% quarter over quarter just on revenue. U.S. commercial remaining deal value is increased 20% quarter over quarter and 145% year over year. That's insane. Wow. U.S. commercial total contract value, $843 million, up 222% year over year. Our Q2 2025 GAAP earnings per share was 13 cents. With an operating margin of 27%, leading to Q2 operating income of $270 million. That's up, 170% or whatever year over year. That rule of 40, man. I mean, if Alex Karp wants to base his business off of this number, if it continues to climb, they'll continue to find new highs. And the day that it drops, it'll need to be justified as to why it dropped without a contraction. But they definitely want people to know that this is the statistic that people should look at, right? In a software business that you combine the growth rates at high margins, it's a pretty fair way to look at a business. I don't think that that's cherry picking or anything. U.S. revenues grew 68% year over year and 17% quarter over quarter, driven by acceleration in U.S. commercial and U.S. government. Yeah, government was a little bit slower than commercial growth, 93% versus 53%. But this was one of the old ARC cases that they said that U.S. government revenue for Palantir was just slowing down and becoming a big headwind on the business. If your slower, segment of revenue is growing 53%, there's no real bear case there. The bear case on Palantir has never been the quality of the business or whether they have customers. It has always been, is this too much to pay for the future growth? And if they can continue to accelerate that, you really can't overpay for a business that hasn't found how fast they can grow yet. At least that's the way that Wall Street's looking at it. Commercial revenue growth, 43%. Commercial or government revenue growth, 49%. Wait, sorry. What am I looking at here in the difference? Oh, this is U.S. government versus global government and commercial growth. So global commercial revenue growth up 47% because Europe is a big headwind for Palantir year over year, and government revenue growth 49%. But that could also clear up and actually turn to a tailwind if they start betting on the business. By the way, guys, 25 minutes from now, the call will start. They have a nice video call for us where analysts even come in on the call. So that will be very important as well. Total revenue grew 48% year over year and 14% quarter over quarter, driven by the continued acceleration of our U.S. business. Total revenue excluding strategic commercial contracts grew 49% year over year and 14% quarter over quarter. And we continue to invest aggressively in AIP in the U.S. while driving operational leverage at scale. Look at that. at a 46% margin, continuing to not only climb in the like total aggregate dollar amount because your revenue is also growing, but the margin that you're taking on the revenue that's growing is also accelerating. You know, a year ago, whenever they would post 37% margins, that was exciting. Last quarter at a 44% margin, you thought, oh, okay, well, it's kind of topped out at the quarter before that at 45. Well, now they just beat that at 46, at the highest amount of revenue that surpassed investors' expectations that did $1 billion. And you know what's crazy? They just did $1 billion. Like it's like they were offering people deals in order to just pass that billion. U.S. commercial customer count up to 485, and that's up 64% year over year. Customer count now up to 849, 10% quarter over quarter, 43% year over year. Commercial customer count up 48%. Yeah, that's the slide right there. 42 deals that were at least $10 million. What's cool about software businesses is that this slide will change as this company ages, and that the amount of deals that they close that are above $1 million, maybe they'll show that off, but they'll start showing off, you know, number of deals that were closed above 20 million, number of deals that were closed above 25, 50 million, as they continue to grow and company reliance or organizational reliance on Palantir grows. We ended Q2 with $6 billion in cash. Jesus, eh? Cash equivalents in U.S. Treasury securities and have no debt. Cash from operations and adjusted free cash flow are up. The percentage is up year over year. We went from a 21% margin to a 54% margin on cash from operations. And then free cash flow, 57% margin. Just a teensy weensy bit of property. Actually, no, it doesn't even look like that. I was going to say purchase of property and equipment, but yeah. Q3 2025, for third quarter 2025, we expect revenue between 1.08 billion and let's just round it up, 1.08 to 1.09. Just say that, okay? But no, they tightened it a little bit. They'll probably come in, I'm already guessing, above 1.09 billion. Okay, they like to beat on above their top end of their guidance, with adjusted income from operations between 493 million and 497 million, full year looking crazy. Oh my. I mean, there's no denying this is a fantastic business. It is a fantastic business. Wow, dude, that is incredible. Is that mainly long term? Yeah, wow. Billings high. Net dollar retention was 128% in Q2 of 2025. Net dollar retention of 128. If you get above 130s, you are playing with the big boys. That's like software at its prime. I mean, there have been companies that have shown off net dollar retentions in 140s and such, but that's still a lot. That's pretty freaking significant. Okay, we have the quarter in 22 minutes. Let's make sure that we didn't miss anything from the other names. Let's take a look at the stock really quick as well. Palantir up 4.76% in the after hours after being up 4% on the day. Okay, so that 4.76 is on top of what we closed at. So that's 168.15. You know, you could open up tomorrow in the 170s. Crazy. HIM's down 9.66%. Mercado Libre recovering a little bit just as the market had closed down 7%. Seeing this recovery makes me happy. Only negative 3.3%. Axon up 3.5%. So they do a lot of security and tools like tasers and stuff like this for law enforcement, but also things like drones and surveillance tools as well that make them pretty interesting, not only as a hardware play, like selling the tools, but also having a subscription service that goes along with that. That's a pretty fast growing business, up 3.5%. So they may open up tomorrow, currently at $771. 52-week high actually hit 830 not too long ago. So, but I mean, if you look year over year, this company is already up 166%, and they're about to open up a lot higher tomorrow morning. Mercado Libre, once again, has seen better days, but we're not too far off. Still in the last year, they're up 44%. This company, if you look back, has just, we've gone one direction. Incredible. HIMS also, I mean, it's hard to feel bad for HIMS investors. 1 year, they're up 287%, but down 9% in the after hours right now. Not worth 165. It is an expensive company. I don't think many people disagree with that. It is a high value to pay, but they continue. They're in a phase right now where they're still accelerating their growth rates. So where does that get to? If that gets to 50%, 60%, 70%, 80%, then we're going to feel pretty stupid not purchasing it at 160 if they continue to accelerate how fast the market is wanting their product. So it really is hard to put a finger down on where this stops, because it hasn't. We haven't found a top. Now, I don't know the company well enough to try to venture a bet on where that top is, but I also see how the market is able to price it quite significantly. Antonio says that it is overvalued as heck, and I would short it for sure now. Well, you have the tools available to you. You can do what you want. A company like this that goes up this fast, I would say, is an automatic, like, you cannot short this business. You don't think that all the investors in the world, like the high amount of institutional money, does not see the valuation on Palantir? They can see it. They have, Yahoo Finance or Moomoo or whatever the heck tools you're using, right? They have even better tools than that. And with some degree, there are sirens going off that say, hey, you know what, this is kind of expensive. Yet their short percentage of outstanding shares is at 2%. Why is that? So you may take the approach that if you cannot stomach that level of multiple and are worried that it comes down and that there could be some article that comes out that brings it down later on. I mean, that has happened before. Things like U.S. government trying to find solutions to, lower their reliance on Palantir, that might look like a big negative. But you only have those types of articles, or you only have that type of commentary whenever the reliance on Palantir is huge, okay? It shows that the product is insanely in demand. Similar comments have been made around large tech and NVIDIA. Hey, we have to get away from the reliance that we have on NVIDIA. Well, it's also the most expensive company in the world. So clearly you still need them, even though you don't want them. They still have the best products in the world, so you're going to come back tomorrow to purchase more. And Jensen smiles and he shakes their hand and he's super nice to them, even though all of them have efforts to try to create custom silicon and get away from NVIDIA. Palantir might end up being in a similar situation. That they're creating software that is redefining how fast companies are able to go. And if you solve rich people problems, you get rich people valuations. You make a lot of money. Yeah. I'm not a shareholder of Palantir. So I'm just talking as a commentator who looks at the growth rates here, who's looking at the margins, and all of them are accelerating. They're accelerating on a margin side, they're accelerating on a year-over-year revenue side. That only goes like they have no debt. They're not servicing any interest load. All that money that they are making from all these clients at higher margins goes back into acquiring better talent that tries to build the next greatest tools. It's kind of a flywheel effect that works quite well. And then, if you're giving stock-based compensation, which Palantir has definitely done for their investors, it usually bodes well for employee retention if they're making literal, multi millionaires just based on stock appreciation over the last few years. So 168.35.41 right now is where we're sitting at. We'll have to see. I'm not making a shot on a Palantir up or down. I'm not a shareholder. That win is for you guys. Congratulations if you are holding. I'm just here as a commentator on the markets and someone who cares about the artificial intelligence industry and software industry in general. And I want to hear comments from Alex Karp. So we're going to take a listen. I got to make sure I have the call here as we begin in 14 minutes. But whenever a company like Palantir comes out and does what they're doing, and you see up 640% in the last year, I mean, that's just ridiculous, right? You look back like from, I mean, this would have been the most optimal time to invest to some degree. Or here. December of last year to now you're up 2,200%, 2,260. And the craziest thing, like, I had shares back at fucking I should not have sworn, at like $8 a share. My only problem, I sold it like 20 because that's how software companies sold or were trading at, I would never have expected that a company that was pretty hated from Wall Street becomes the most loved darling on the street. And they weren't growing all that quick back then. Their growth had actually decelerated all the way down to 13% year over year, only to, pick up greatly. Margins picked up greatly. But yeah, it's always pretty interesting with CEOs like Alex Karp because you never know if the market ends up hyper loving those types of customers or potentially, not liking them at all. But yeah, if you guys feel like shorting it, that's your prerogative. You can make that decision on your own. But whenever I see a company that's up 400 or 640% in 1 year, the way that I like to look at that is that you avoid those types of names from shorting or betting against those businesses at all costs. Because clearly they have clawed their way out of some serious situations. They have found an unbelievable go-to-market strategy, which is what they missed before. They had quite a great product. We all knew that, but they just weren't able to sell it. And then AIPCon kind of came about and then they just killed, or at least the boot camps came out and then they just killed. After that, it was up and up and up and up. Just a recap for the new people that are coming in that are looking at Palantir's quarter before we get into the call here in 10 minutes. Revenue ended up beating expectations, Wall Street expectations, by 6.5%. They beat the guide from what Palantir actually put out by 6.8%. So Wall Street was already knowing that they were going to beat. They ended up beating a lot more than that. They beat billing estimates by 11.7%. They beat on operating income estimates by 15%. And, 14.9% for Wall Street, 15% from the guide. So Wall Street was expecting better than expected results. They got better than expected results by a wide margin. 14 cents of EPS beat estimates by 2 cents. And so they came in at 16 cents, sorry, and beat on free cash flow estimate by 54%. 54. Annual guidance also accelerated across the board faster than Wall Street expectations. They raised guidance faster than Wall Street thought by 6.4%. They raised annual U.S. commercial growth rates from 68 plus percent to 85%. Holy crap. They beat on, or they raised annual operating income guide by 11.4%, which beat estimates of 11.6%, and raised free cash flow guide by 12%, which beat estimates that they were going to raise it by 10%. That is pretty freaking exciting. They got that $1 billion revenue mark on the dot, which was the sort of make it or break it for excitement on Wall Street. And US commercial came in at 306 million, which was a 92.5% year-over-year growth rate. 20% just quarter over quarter. 20% quarter over quarter. I'm going to say it one more time, because there's a lot of companies that don't grow revenue by 20% on a year-over-year basis. 20% quarter over quarter. And last quarter was a strong quarter. I mean, it is an exceptional business. It is. Operating income came in at 46.3%, up over the 44.2% from quarter over quarter. Net income margin was 40.3%, the highest the company has ever seen, up 2.5% quarter over quarter, up 7.6% year over year, and up 17.9% over the last 2 years. And that's across the board. Like over the last year, they've raised operating income by adjusted operating income by 6.9%, GAAP operating income by 11.3%, free cash flow by 34.8%. Beat on the margin, by the way. Their margin over the last couple of years has gone, free cash flow margin has gone from 18% to 22% to 42%, now 56.7%. Sorry, 42% was last quarter. This quarter was 56.7%. 6% year-over-year share dilution, which was slower than last year. It is still vastly pricey. Okay, I'm not denying that. But it is an exceptional business. I think it's probably fair to say it's the most expensive company in the market. It's also a one of one. And I think both can be true. Someone said BP is running. Not really. It is up over 2% on the day, but just to rehash, Vertex is down 13.4%. Palantir up 4.4% to 167.65. HIMS is down nearly 12% to 55.75. When's the last time we saw those prices? 55.75 might even have been, yeah. Price is not really seen since July 23rd. Not terrible. Mercado Libre down 5%, was recovering a little bit, but now starting to draw back down in the after hours. And Axon up 3.4%, Navitas down 13.3%. I mean, the show is on Palantir here, which is insane. You're outgrowing a $58 billion security company right now on great earnings. Wow. Let's make sure that we have the call ready to go in 5 minutes here. Let's see. If everyone talks about Palantir, it's time to sell. I don't think that that's a good indicator. I think that that can happen for meme stocks and stuff like this, companies that don't make a lot of money. Whenever everyone talks about them, that can be the case. But if everyone's talking about Palantir, that can only help brand awareness. It probably actually goes to benefit them even further. Think about NVIDIA, for example. If everyone talks about NVIDIA, does that mean it has to go down? $4.4 trillion business? Can the stock hold up till tomorrow? We'll have to see on the earnings call. The earnings call is going to be a really big part. So because it's a video call, we're not going to have the stock price up. Let's use, I mean, I'm going to be doing this in the chat. As you guys can see, I can pull up, comments from the chat. And if you guys can help, post the actual stock price as we are live, and we'll put them on screen to help people that are watching Alex Karp in real time. I'll be doing that. I'll be taking out some of his quotes, stuff like this, just to help people that might have missed some of the things that he said or the stock price and where it's moving. That can all help. I'm just here to learn. I'm not a shareholder. No, I'm not a shareholder, but I'm here to learn. We're all trying to understand this business a little bit more. And the best way to do that is exactly what 1,100 or 1,200 of you guys have shown up to do, which is listen to the earnings calls, listen to management, follow along to these points. And then on the back end of that, do a little bit of research on what you think that companies in similar situations have for pricing. Now, there's not really another company that is even remotely priced like Palantir. That's why I find it a little bit hard to invest in at these prices. But if they just continue to dominate over and over and over, if management has anything to say about increasing these level of growth rates, of getting to a rule of 40 above 100 times, or even potentially higher than that, if he foresees a vision where he gets to 60+% growth rates at 60+%, margins, are we supposed to sell off a company at 120 times rule of 40? Can he hold up that growth for multiple quarters in a row? You quickly get to valuations that are justified if you're growing that fast. Growth rates make a massive difference in the multiples that people are willing to pay for companies. NVIDIA used to be considered expensive, and I went through a rashy bunch of crap that people told me that NVIDIA was too expensive whenever I was holding it. And then a couple quarters later, the stock didn't move, but the earnings did. And now they look cheap again. In 20 years. Come on now. Come on. Net income or a PE ratio that you're saying of 700 times, which is expensive. I mean, they need to double net income, and then that comes down to 350. Double it again, and you're at like 175. Things can happen very quickly at companies that grow this fast. Royce sold many of his Palantir shares by accident? By accident? No, this can't be real. I don't think you're going to see too much. Well, there's margin expansion right now overnight. At least I'd like to think there is. But it doesn't mean that you're going to continuously margin expand. That's the only problem is like whenever you're looking for a margin of safety in a company, this one is, without a margin of safety. But yeah. Yeah, but you're saying with 100% year-over-year growth. Yeah, but you're paying, like, you're not expecting companies to pay back their price to earnings ratio in 4 years. You're expecting them to pay it probably over the next 20 years. So if you look at it from a PEG perspective, that's usually what people like to do. And if people are wrong, if Wall Street has been wrong on the growth rates, then you quickly have to rewrite what you think the price to earnings growth ratio is for a company like Palantir. By the way, call is starting. Let's jump into this. Let's get ready. There's probably going to be a little bit of a disclaimer here. The stock is dropping just slightly as we're about to start this call, still up 3.88%. But This is the call. So we're live. 20-year expectations with Palantir with AI will do their what? Yeah, I'm not worried. I'll sell my
Good afternoon. I'm Anna Saro from Palantir's finance team, and I'd like to welcome you to our second
Let's
quarter
listen in.
2025 earnings call. We'll be discussing the results announced in our press release issued after the market close and posted on our investor relations website. During the call, we will make statements regarding our business that may be considered forward-looking within applicable securities laws, including statements regarding our third quarter and fiscal 2025 results, management's expectations for our future financial and operational performance, and other statements regarding our plans, prospects, and expectations. These statements are not promises or guarantees and are subject to risks and uncertainties, which would cause them to differ materially from actual results. Information concerning those risks is available in our earnings press release distributed after the market closed today and in our SEC filings. We undertake no obligation to update forward-looking statements except as required by law. Further, during the course of today's call, we will refer to certain adjusted financial measures. These non-GAAP financial measures should be considered in addition to, not as a substitute for or in isolation from, GAAP measures. Additional information about these non-GAAP measures, including reconciliation of non-GAAP to comparable GAAP measures, is included in our press release and investor presentation provided today. Our press release, investor presentation, and other earnings materials are available on our investor relations website at investors.palantir.com. Over the course of the call, we will refer to various growth rates when discussing our business. These rates reflect year-over-year comparisons unless otherwise stated. Joining me on today's call are Alex Karp, Chief Executive Officer, Shyam Sankar, Chief Technology Officer, Dave Glazer, Chief Financial Officer, and Ryan Taylor, Chief Revenue Officer and Chief Legal Officer. I'll now turn it over to Ryan to start the call.
Our tremendous second quarter results demonstrate how Palantir is redefining what is possible with enterprise AI. We remain maniacally focused on value creation for our customers. Our U.S. business is the engine of this transformation. U.S. commercial led with 93% year-over-year revenue growth, outpacing our U.S. government revenue growth of 53% year-over-year. Our overall U.S. business revenue grew 68% year-over-year and 17% sequentially, and now represents 73% of total company revenue. We surpassed $1 billion in quarterly revenue for the first time, as our overall revenue growth continued to rapidly accelerate to 48% year-over-year growth in Q2. Through this record-breaking quarter, our Rule of 40 score continued to climb, reaching 94 in Q2, which is up 11 points quarter over quarter, particularly noteworthy given the scale of our business. As AI continues to relentlessly advance, the market has become increasingly aware of the most important and fundamental technical reality. LLMs, on their own, are at best a jagged intelligence divorced from even basic understanding. In one moment, they may appear to outperform humans in some problem-solving task, but in the next, they make catastrophic errors no human would ever make. By contrast, our ontology is pure understanding, concretized in software. This is reality, not rhetoric, and enterprises are experiencing this reality keenly. LLMs simply don't work in the real world without Palantir. This is the reality fueling our growth. We booked our highest TCV and ACV ever last quarter, with $2.3 billion in TCV and $684 million in ACV. We closed a whopping 157 deals worth $1 million or more, of which 66 deals were worth $5 million or more, and 42 deals were worth $10 million or more. We continue to see expansions with our existing customers, as our top 20 customers now average $75 million a year in trailing 12-month revenue, up 30% from a year ago. The impact our software is delivering for our customers as they cross the chasm is ever widening their advantage over the AI have-nots. Citibank shared that the customer onboarding process and relevant KYC and security checks that once took them 9 days now take seconds. Fannie Mae recently announced they're working with Palantir, decreasing the time to uncover mortgage fraud from 2 months down to seconds, saving the U.S. housing market millions in future fraud losses. Nebraska Medicine president and COO noted they saw a 2,100% increase in discharge lounge utilization, which is the equivalent of adding another unit to their hospital. They even noted, quote, "We've been using the term a Palantir unit of time, and that represents when we're driving value in less than an hour." Lear Corporation recently signed a 5-year extension. Over the past 2.5 years, they have leveraged Foundry and AIP to support over 11,000 users and more than 175 use cases, including proactively managing their tariff exposure, automating multiple administrative workflows, and dynamically balancing their manufacturing lines. Their CEO highlighted that their enterprise-wide adoption gives them, quote, "a first-mover advantage in the automotive industry, which will be difficult to replicate." Our US commercial business exited Q2 with a 93% year-over-year and 20% sequential growth. Due to its acceleration, US commercial comprised 31% of our Q2 revenue versus 23% a year ago. We continue to focus on delivering AI production impact, evidenced by the strength of new starts and expansions at existing customers. We're seeing new starts with higher ambition and existing customers expand their work at a faster rate. A healthcare company completed a bootcamp in April, then signed an $88 million TCV deal a month later to coordinate and automate patient care across facilities. An American telecom company started working with us in 2022 and has increased their contract 10x since then and is now projecting hundreds of millions in cost savings. Our US government business grew 53% year over year and 14% sequentially last quarter, driven by the impact we're delivering across civil, intel, and defense, including greenfield efforts. US Space Force Space Systems Command awarded us a $218 million delivery order to support seamless synchronized multi-domain warfighting for the space and air operational communities. The ceiling for our Maven Smart System contract was increased by $795 million to prepare for what they expect will be significant demand from combatant commands for our AI-powered software capabilities over the next 4 years. Last week, Palantir was awarded a 10-year enterprise agreement with the Army, totaling up to $10 billion, consolidating 75 contracts into a single contract. The Army is one of our longest-standing customers. We are honored to embark on this next phase together. We remain focused with deep respect and dedication on equipping our warfighters with decisive advantages over our adversaries. Looking towards the back half of the year, my enthusiasm for our business is at an all-time high. With determination and persistence, we'll continue delivering exceptional AI production impact for our customers, running full speed at the critical challenges they entrust us to solve. I'll now turn it over to Sham.
Thanks, Ryan. 20 years of grinding has built a unique moat and a massive lead. Our products were built for this moment, and the numbers show it. Realizing value from AI in the enterprise requires the elegant integration of LLMs, workflow, and software. And that's only possible with ontology. As LLMs continue to improve, it only further accelerates the value realization, and therefore the value of our products. Our foundational investments in ontology and infrastructure have positioned us to uniquely deliver on the AI demand both now and in the world ahead. A substantial development over the last couple of quarters is the realization and acceleration of our vision of ontology web services as an architectural concept for our customers. AIP isn't just software our customers use, it's software our customers are building their software on. Software companies are replatforming away from the highly unopinionated services and building blocks of the hyperscaler stack onto AIP with its highly opinionated building blocks that get you to value 10 times faster. Chris Johnson, the co-CEO of Teletracking, who recently replatformed on AIP, said that he was flooded with inquiries from CEOs and CIOs when he went public on his partnership with Palantir. Replatforming on AIP has enabled customers to leapfrog their competition and beat them to market. And this will continue to be both a significant area of investment on our product roadmap and an accelerating growth opportunity for the business across commercial and government. I mentioned this last quarter. On their earnings calls, CEOs have been highlighting the transformative impact of AIP on their organizations. That trend continues. But also this quarter, you can hear from the frontline workers about the same transformation AIP is bringing them. AI is giving the American worker superpowers. At the All-In Winning the AI Race Summit in DC, an ICU nurse, a factory worker, a hospital administrator, an electric vehicle battery maintenance technician shared how AI is making them better, faster, and more productive. giving them more time with patients, more time solving problems, and enabling more workers to access the job market. Our investments in AIFD are accelerating the already eye-watering time to value for our customers and providing customers with capabilities to solve bigger and more complex problems independently. AIFD is designed to enable autonomous execution across a wide array of tasks, including creating and editing the ontology, building data transforms, creating functions, debugging issues, and building applications. With its own closed-loop error handling, AIFD can identify and correct issues and notify human users if needed. And it's been designed for seamless collaboration with humans in the loop through integration with AIP's branching. Warp Speed, our modern manufacturing operating system built on AIP, continues to deliver for our industrial customers, from nuclear companies to the defense industrial base. With MRP Speed, a component of Warp Speed, one of our customers remarked that balancing the production line has shifted from 1 day to 1 hour. We have seen a dramatic set of opportunities open up in U.S. shipbuilding as America gets serious about fixing its maritime industrial base. China built more ships last year than we have built cumulatively since the end of World War II. Now the mighty American engine of innovation is spinning up and tackling this problem head on. Maven Smart System met its moment in recent operations of great import. Maven adoption continues to grow, with usage doubling again since February. Last quarter, I mentioned that usage doubled in the first 9 months of 2024 and doubled again in the subsequent 5 months. This is on top of that. With that, I'll turn it over to Dave to take us through the numbers.
Thanks, Shyam. We had an unprecedented second quarter, surpassing $1 billion of revenue in a quarter for the first time and delivering our highest Rule of 40 score ever of 94. Q2 revenue growth accelerated to 48% year over year, exceeding the high end of our prior guidance by nearly 1,000 basis points and representing a 2,100 basis point increase compared to the growth rate in Q2 of last year. On the back of this continued strength, in the third quarter, we are guiding to revenue of $1.085 billion, representing over 8% growth quarter over quarter, our highest ever sequential revenue growth guide, and 50% growth year over year. We're also raising our full year 2025 revenue guidance midpoint to $4.146 billion, representing a 45% year over year growth rate, a 9-point increase over our full year 2025 revenue guidance last quarter, and our largest ever full year revenue guidance raise. We are also raising our full year U.S. commercial revenue guidance to an excess of $1.302 billion, representing a growth rate of at least 85%, 17 points higher than the guidance we gave just last quarter. Accelerating demand for AIP continues to drive the outperformance in our U.S. business overall, which grew 68% year over year and 17% sequentially in the second quarter. Our U.S. commercial business grew 93% year over year and 20% sequentially, and our U.S. government business grew 53% year over year and 14% sequentially. We delivered these outstanding top-line results as adjusted operating margin expanded to 46%, exceeding the high end of our prior guidance by nearly 300 basis points. Our revenue and profitability drove an 11-point sequential increase to our Rule of 40 score from 83 in the first quarter to 94 in the second quarter. We continue to generate strong cash flow with second quarter adjusted free cash flow of $569 million, representing a margin of 57%. Turning to our global top-line results, second quarter revenue grew 48% year over year and 14% sequentially to $1.004 billion. Second quarter U.S. revenue grew 68% year over year and 17% sequentially to $733 million. Excluding the impact of revenue from strategic commercial contracts, second quarter revenue grew 49% year over year and 14% sequentially, and second quarter U.S. revenue grew 68% year over year and 17% sequentially. Customer count grew 43% year over year and 10% sequentially to 849 customers. Revenue from our largest customers continues to expand. Second quarter trailing 12-month revenue from our top 20 customers increased 30% year over year to $75 million per customer. Now moving to our commercial segment. Second quarter commercial revenue grew 47% year over year and 14% sequentially to $451 million. Excluding the impact from strategic commercial contracts, second quarter commercial revenue grew 49% year over year and 14% sequentially. We closed $1.1 billion in commercial TCV bookings, representing 185% growth year over year. AIP continues to drive existing customer expansions and new customer conversions in the U.S. Second quarter U.S. commercial revenue grew 93% year over year and 20% sequentially to $306 million. Excluding revenue from strategic commercial contracts, second quarter U.S. commercial revenue grew 95% year over year and 20% sequentially. We had our strongest quarter of U.S. commercial TCV booked at $843 million, representing growth of 222% year over year. Over the past 12 months, we closed $2.8 billion of U.S. commercial TCV bookings, a 141% increase from the prior 12 months, highlighting the demand for AI production use cases. Total remaining deal value in our U.S. commercial business grew 145% year over year and 20% sequentially. Our U.S. commercial customer count grew to 485 customers, reflecting growth of 64% year over year and 12% sequentially. Second quarter international commercial revenue declined 3% year over year and grew 2% sequentially to $144 million. For our international commercial business, we continue to capitalize on targeted growth opportunities in Asia, the Middle East, and beyond, but remain focused on accelerating the growth in our U.S. business. Revenue from strategic commercial contracts was $5.1 million for the quarter. We anticipate third quarter 2025 revenue from these contracts to be between $2 to $4 million compared to $10 million in the third quarter of 2024. We anticipate 2025 revenue from these contracts to be less than 0.5% of full year revenue. Shifting to our government segment. Second quarter government revenue grew 49% year over year and 14% sequentially to $553 million. Second quarter U.S. government revenue grew 53% year over year and 14% sequentially to $426 million. This growth was driven by continued execution in existing programs and new awards reflecting the growing demand for AI in our government software offerings. Second quarter international government revenue grew 37% year over year and 11% sequentially to $127 million, bolstered primarily by our continued work in the UK. We closed our highest ever quarter of TCV bookings at $2.3 billion, up 140% year over year. This eclipses our prior highest quarter of TCV bookings in Q4 2024 by nearly $500 million. Net dollar retention was 128%, an increase of 400 basis points from last quarter. The increase was driven both by expansions at existing customers and new customers acquired in Q2 of last year as we see the effect of the AI revolution. As net dollar retention does not include revenue from new customers that were acquired in the past 12 months, it does not yet fully capture the acceleration and velocity in our U.S. business over the past year. We ended the second quarter with $7.1 billion in total remaining deal value, an increase of 65% year over year and 20% sequentially, and $2.4 billion in remaining performance obligations, an increase of 77% year over year and 27% sequentially. As a reminder, RPO is primarily comprised of our commercial business, as it does not take into account contracts with an initial term of less than 12 months and contractual obligations that fall beyond termination for convenience clauses, both of which are common in most of our government business. Turning to margin and expense. Adjusted gross margin, which excludes stock-based compensation expense, was 82% for the quarter. Adjusted income from operations, which excludes stock-based compensation expense and related employer payroll taxes, was $464 million, representing an adjusted operating margin of 46%. Q2 adjusted expense was $539 million, up 9% sequentially and 27% year over year, primarily driven by our continued investment in AIP and technical hiring. While we expect adjusted operating margin to continue to expand for the second half of the year, as in prior years, we expect a significant ramp in expenses in the third quarter due to the seasonality of new hire starts. We remain committed to investing in the most elite technical talent, as well as a product pipeline and AI production use cases, all while delivering on our goals of sustained GAAP profitability. Second quarter GAAP operating income was $269 million, representing a 27% margin. Second quarter GAAP net income was $327 million, representing a 33% margin. Second quarter stock-based compensation expense was $160 million, and equity-related employer payroll tax expense was $35 million. Second quarter GAAP earnings per share was $0.13. Second quarter adjusted earnings per share was $0.16. Additionally, our combined revenue growth and adjusted operating margin accelerated to 94% in the second quarter, an 11-point increase to our Rule of 40 score from the prior quarter, and our 8th consecutive quarter of an expanding Rule of 40 score. With the increase in our 2025 revenue and adjusted operating income guidance, we are now guiding to a Rule of 40 score of 91% for the full year. Turning to our cash flow. In the second quarter, we generated $539 million in cash from operations and $569 million in adjusted free cash flow, representing margins of 54% and 57%, respectively. Through the end of the second quarter, we repurchased approximately 2.5 million shares as part of our share repurchase program. As of the end of the quarter, we have $899 million remaining of the original authorization. We ended the quarter with $6 billion in cash, cash equivalents, and short-term U.S. Treasury securities. Now turning to our outlook. For Q3 2025, we expect revenue of between $1.083 and $1.087 billion, and adjusted income from operations of between $493 and $497 million. For full year 2025, we are raising our revenue guidance to between $4.142 and $4.150 billion. We are raising our U.S. commercial revenue guidance to an excess of $1.302 billion, representing a growth rate of at least 85%. We are raising our adjusted income from operations guidance to between $1.912 and $1.920 billion. We are raising our adjusted free cash flow guidance to between $1.8 and $2 billion. And we continue to expect GAAP operating income and net income in each quarter of this year. With that, I'll turn it over to Alex for a few remarks, and then Anna will kick off the Q&A.
Well, as usual, I've been cautioned to be a little modest about our bombastic numbers, but it's honestly, there's no authentic way to be anything but have enormous pride and gratefulness about these extraordinary numbers. Now, when you're obviously looking at numbers, there's numbers and what do they mean? So if you take, I would say, the truly once in a generation number of 93% growth in US comm off of a large base, or even 53% growth in USG, which is astonishing, even though obviously it shows where the government is downstream from general trends in AI, or the 68% growth in the US. You still have to say, why are these numbers even more astonishing than they appear? Well, obviously, you look at what is the meaning of the number, and the Rule of 40 basically tells you the meaning of the number. And if that number is somewhere in the 50s, 60s, 70s, that's pretty baller. When it's the single most impressive number I think any enterprise software company's ever seen, there is something anomalous going on. And obviously, the prediction that all the attendees would be downstream from the value, so it would be chips and ontology, is being proven. Not as a thesis, but as a reality. And then you would obviously ask, well, what is the base? We're now working off of a very large base, getting to we did our $1 billion, so it's a very significant run rate. But then I would say, if you look at a kind of more qualitative version of Palantir, we did this with no compromise in terms of what we believe. We still believe America is the leader of the free world, that the West is superior, that we have to fight for these values, that we should give American corporations and most importantly, our government, an unfair advantage. We've demonstrated in every area and arena of American life and international life that we do deliver an unfair advantage for our allies, our friends, and our compatriots. We have done this by creating a company where every single component is value accretive. There are almost no parasitic elements to this company. We have a small sales force. We have very little BS internally. We have a flat hierarchy. We have the most qualified, interesting people, heterodox in their beliefs. We have an orchestration engine that deploys forward deployed engineers everywhere, a model that everyone despised and disdained until literally a quarter ago and thought would lead to a low multiple. Guess you were wrong. We have a series of products that are on the front line, most notably Ontology, but also Foundry and Maven. And this is a confluence. This is the perfect time for Palantir. And I would also say, at the risk of saying the obvious, this is a perfect time for a revolution in the United States of America. We are very, very bullish on America. We have some really crucial and important clients internationally, large clients, commercial clients in Europe, and also government clients outside of America that we're proud of. But this is an American revolution. It's being led by Ontology and chips, and also to some extent large language model providers. We are also anomalously bullish on all aspects of American life, including and especially people in the blue collar. Sham and others are leading our charge to arm the working class, blue collar workers with AI agency enhancing skills. AI is an agency enhancing revolution. Our numbers show that. We've seen on the front line in the United States government that people with less than a college education are creating a lot value and sometimes more value than people with a college education using our product. We're also going to reach out to labor leaders and help them organize ways that workers can earn AI enhanced earnings. And then, but in general, what you see in our numbers and the reason it's so successful is our clients and partners are downstream from our unit economics and they want our unit economics. And we are teaching them ways in which to work, both cultural and with our products that will allow them to get unit economics that look like 94, 93, 68, 53, respectively. Those numbers are astonishing, incredible, and we're planning to share them with our partners via exposing them to a way in which to work in an AI revolution so that they have the same kind of agency we do. I run around U.S. commercial telling corporate leaders, if you want to have your First Amendment rights to an opinion again, get our unit economics, and then you too can say things that are true in public like we do. It's very motivating to people and very motivating to us. So thank you for all of our supporters, and we should entertain questions, but this is a once in a generation, truly anomalous quarter. And we're very proud, and we're sorry that our haters are disappointed, but there are many more quarters to be disappointed, and we're working on that too.
Thanks, Alex. We'll now turn to questions from our shareholders before opening up the call. We received a question from Christina who asks, beyond just using LLMs, how is Palantir making AI more useful for frontline workers and decision makers, not just data scientists?
Well, thanks, Christina. There's a surprising amount of doomerism that comes out of the ivory tower, the folks who are doing AI research. We spend all of our time at the front line with the factory worker in the fire cell, and the vibe could not be more different. What we observe is that AI is giving the American worker superpowers. Look at the nurses in the ICU who have more time to spend with their patients, less time munging around collecting the clinical notes to understand what care to deliver. Or the factory workers in the submarine industrial base who get back 3 days of quoting a part to actually spend time solving problems in production. And perhaps the use case that I'm most excited about around Panasonic Energy, make electric vehicle batteries, actually being able to develop AI to train their workers to manage this exquisite high-end Japanese technology, where the background of the workers is casinos. And I think this is job expanding. It's empowering. To Alex's point, it's really pro agency, pro creativity, and that's a big reason why we've leaned into creating the American Tech Fellowship. Our lived experience is that some of those creative AI applications are coming from the blue collar worker, the autodidact that has a little bit of self-taught knowledge, not the classically trained computer scientist, not just using AI, but more importantly, building AI applications that are changing their business. We want to find these people, we want to empower them, credential them, put them through the training, and unleash them on the American economy.
Thank you, Sham. Our next question is from Dan with Wedbush. Dan, please turn on your camera, and then you'll receive a prompt to unmute your line.
Thank you. And I'm sorry also that the haters are unsatisfied, but look, can you just hit on, you're basically doing this without a direct sales force. So like, are you gonna go down that path, or it's just gonna be, prudently going down, just given the type of growth you're seeing? Can you just like walk through how you're thinking about that, just given such the massive success you're having, essentially with no direct sales force?
Yeah, for those of you who are new to Palantir, one of the many, many controversial, we were doomed to failure decisions we made was that we rejected an idea of basically the way software is often done, useless product that becomes parasitic, you can't get rid of it, and you have 1,000 steak dinners all convincing you by something is useless, you can't get rid of. And we believed that we would always be downstream from the value we create, and we would be able to capture that value. And if you look how this company is organized, in government and commercial, it is all built around those ideas, including internal orchestration, including our flat hierarchy, including the products we deliver. Our primary sales force now, and I think likely in the future, are going to be current customers telling other customers, if you want this to work, bring them in and listen to how they orchestrate their culture inside your culture with their products. And it's not that we won't have direct salespeople, but we need, what's really helping us now is the increased credibility so that people use more of our product on day one, so that they're not using the Foundry product of 3 years ago. They're really aspiring to what can be done with ontology and large language models and our FDE structure. And the disadvantage of this is, yeah, you don't have 10,000 people roaming around selling something they don't understand. But the advantage is we go from, once we come in the door, we come in with enormous credibility. So the person we're selling to believes we will make them a lot of money, save them expenses, or we will make their soldiers safer and more lethal. And they believe it because they've heard it from someone they trust, and or in the US economy, there are a lot of people that go from one job to the next. So that somebody we meet in one place very likely will be somewhere else in a year or two. And the first call we get, in fact, I was just doing a customer call, partner call. We're very early with these people. The story was, hey, I got blocked at my last enterprise. They wouldn't let me buy Foundry. I've been following Foundry and now Ontology. First call was to us. And then when the meetings have shifted from, hey, we may not know how to use you, to very much tell us how we could create the kind of leverage you have. And that's why these numbers are going up at the top end and at the bottom end, because we're coming in with a different kind of credibility and leverage. So in the near future, the 10x revenue we are going to get in the US over the next, in my view, next 5 years. But certainly what we forecasted for this year, it's really people saying, wow. I mean, and then you have, and then everyone talks about it on the earnings calls. So like when you see AIG or others saying, I believe I can dramatically change my business at a lower cost. You know, CEOs, CIOs, chief revenue officers, the whole group are like, get them on the phone. And this just makes our whole thing easier because we do not have time or interest in spending all the time we did in the past, starting from complete ignorance. We're starting from a much higher level. And then the higher level allows us to ratchet up. So that's going to be what we're going to do. Obviously, we're going to continue. Samir and others and Cam have built a very small, nimble sales force. We have people who've been here for a long time doing very large deals. We have Ryan, who's doing this, organizing the contracts full time. But I mean, I'll let Ryan speak to this. The leverage we have in these calls, I don't mean leverage just financial, the leverage to create the value that is upstream of what we get paid. We are very focused on the value creation and then collecting later.
Yeah, and what we're seeing is like the leadership of our customers are coming to us saying, we're seeing it start more quickly, expand more quickly, and expand deeper. And they're coming to us now at the beginning saying, how do we roll this across the whole enterprise?
And they're willing to be more experimental because, you know, we were at a big customer and it's like, look, we'll do this in this side of the contract. Why don't you let us do the rest and we'll just see the value, see the value. We'll discuss it later. Yeah. And then this is yet another advantage America has that we underestimate. It's so plastic. If you compare America to, say, Germany, the way in which they build industry, they purchase software, they judge software, there's a pattern that is etched in stone there. But in America, people are very open to value creation and they're under more pressure. And also people inside the company have more upside in the company. They have more equity. They want things that work. They don't want theory.
Thank you both. Our next question is from Mariana with Bank of America. Mariana, please turn on your camera and then you'll receive a prompt to unmute your line.
Good afternoon, everyone.
Greetings.
I have two questions. One on the AI action plan that the White House put out a couple of weeks ago. You have been part of this process through recommendations. What excites you the most and where do you think there is still work to do? And the second one is about talent, because to make sure that you are part of the dominant software of the future, you have to make sure that you keep attracting, retaining, and training the right talent. And we are seeing this, battle over talent in software companies right now. How you make sure that you are ahead of everyone else and keep attracting the right people.
On the first bit with the AI action plan, I think it's incredibly exciting. Essentially, we're taking all the brakes off. AI really is an empirical journey, and you have to roll up your sleeves and actually focus on the implementation of it. It's a clear recognition that having an American open AI tech stack that we all build our solutions on is absolutely crucial and important. And that perhaps we had been spending too much time hand-wringing and not enough time doing things. So not only Palantir, but I think the entire industry and the customers of the industry are really excited to get to work and to realize the value that we can have by doing this, and the support and the subsequent follow-on investments that this implies. And on the talent side, I think the most important thing is giving people access to problems that matter. We've seen our retention be quite strong. There's really no other place. So you think about the number of production workflows that we have around AI. There's a set of folks who like to just do research, who like to just think about what is possible. But at this point, we are able to attract and retain and motivate people who actually want to bend the arc of history here, work on the problems that drive outcomes.
This is what Shyam's saying is so right. Part of the value of doing these calls is like, if you are a highly talented person and would believe that the West is superior, or at least tolerant of me telling you it every day, you will not find a place anywhere I've seen. And now in over 20 years, I've interacted with almost every agency in the West, many of the largest companies, many of the smaller companies. You will not find a place that is comparable on time of joining to full agency like Palantir. We have this, and by the way, we're ratcheting this up, like more internal orchestration. You come here from the time you come here to the time you're working on something that literally will be in the paper, in the economic section, in the consumer section, or in the government section of the paper. It could be 3 months. There is nothing like that. A, and B, now that everyone knows this is by far the best credential in tech. If you come to Palantir, your career is set. And the other thing that is not exactly related that I really just love about that, if you did not go to school, or you went to a school that's not that great, or you went to Harvard or Princeton, Yale, once you come to Palantir, you're a Palantirian. No one cares about the other stuff. They don't care what your parents did. They don't care how rich your parents are. They don't care where you went to school. They care about, were you at Palantir? How are you viewed at Palantir? What did you work on at Palantir? And so we are making a new credential independent of class and background at Palantir. That is the most important credential in tech. And that's one of the two reasons, agency plus that we are doing very, very well on the talent acquisition and retention side.
Thank you both. Alex, as always, we have a lot of individual investors on the line. Is there anything you'd like to say before we end the call?
Maybe stop talking to all the haters. They're suffering. Don't tell them about how important the ride has been, how exciting it's been, how much you've enjoyed the ride, how much fun it is to write little emails to analysts that spent 20 years learning about software and have been wrong about every quarter. Maybe just don't talk to them. There's some suffering going on. But for the rest of us, we are enjoying this time, and we're enjoying it with you. And our performance and your support of it is both important because you deserve it, and we are grateful that you gave it to us, especially, and I definitely have not forgotten, there would have been no DPO. We would not have gone from our low share price to now. We would not have many of the clients we have, and we wouldn't have some of the pride we have without you. But I would also say our ability to win, some of the pride we have without you. But I would also say our ability to win while sticking by what we believe is important for the world, because we live in a world where people are purveying half-truths, partial truths. Palantir gets attacked just because we help make this country even better, because we support the values, because we defend it. And, us being able to win while having an opinion does have an impact on the world, if only because the people who think we are wrong or not good have to be a little jealous and suffer. And you know what? That's a good thing too. So I'm very, very proud of this quarter. And by the way, obviously to all the Palantirians who made this happen, behind the scenes, we are just, to use Sham's term, grinding, and every day and all the time on our most important things we're working on. And, we've had deployments here that, because of their criticality, our people are working around the clock for half a month, around the clock on a cycle. And they're really proud to do that. And they have changed the arc of history, and your support inside the company and outside the company. And also, we're asking people to work in an environment when they come in here that is very different than anything they've ever worked on. They most of them come from university where they've just been engaged in platitudes. Now it's frontline where things matter, and we do things very differently than anyone else. And the fact that Palantirians have aligned to do this, to work as a phalanx in the service of what I view as a higher purpose, and I think many agree with me, is an enormous accomplishment. And especially I speak for all of us who work with these people. This is a very special environment, and I'm super proud to somehow ended up being your leader. So, thank you.
Thank you. That concludes Q&A for today's call.
Holy. Okay. That was exactly what I expected it. I mean, he is such an amazing hype man, gets people very excited. Quick call, by the way. That was 40 minutes. But yeah, the stock reacted quite positively to that. We see the company up 3.4% in the after hours. And this is sort of where Alex Karp started to come in. And now that Alex Karp has left, it's starting to fall again. So very, very interesting. I mean, I'm not a shareholder of this company, but I do follow it closely. And yeah, incredible. So what did you guys think? Are the holders still holding? Are people looking to buy in? See, that's the hard part. If I was holding at low average prices and was watching this growth, I'd be very excited. Now, it is quite a price to pay as a new investor trying to get in, but I don't know if that is, something that is understood by investors, and that they see a long-term future for this business. Like, whenever we take a look at Palantir, and you take a look at their just top line growth, their revenue here, it is accelerating into quite exciting new highs, right? And if you look at this blue, which is the growth rate, and by the way, if we track, let's go ahead and just track the stock price over top of this really quick. As the company started to slow down in their growth rates, you actually started to find pricing that was really, really cheap on the company. Once that started to accelerate, you can see how the market had changed its view on this business whenever growth started to accelerate. And that's not just where we're placing the stock, but also like you can see here, it started to really start to take off. It's because it also started to talk about their potential growth in billing or potential growth in guidance, right? So although we bottomed here, it doesn't necessarily mean that that's where the bottom of sentiment was. Then the growth started to accelerate. Now, if you actually take a look at the difference between 39% and 48%, which was a little bit of, Europe holding it back last quarter, but not only is the growth still accelerating, but it actually looks like the pace in which they're growing is still picking up. How can you possibly say that we're at the top of the stock price today if it continues to go in this direction? That is a strong chart right here, going from 13% year over year growth to 48%. If this gets 55% next quarter, 60+% later on, 70%, then it's still impossible to try to model out how fast this company can take over the broader market. That is one very interesting piece, is that there's just so much potential growth here. Now, I understand, okay, this is an expensive business over time and has been for some time. That on a PE basis, we're looking at approaching 700 times. If we take a look at, price to sales, price to free cash flow, we can just look at a couple of these metrics. I'll get rid of this dip because it makes things look a little bit different, but it's very expensive. Okay. I understand there's other software businesses that don't price nearly as expensive as Palantir is. But you have to give something up to the growth rates, to the margin expansion. These things are very, very interesting. And in fact, let's take a look at margins really quick. We'll just grab a mix of we'll just go all the way down. Gross profit, margin profit, or EBITDA profit, net profit, and then a free cash flow margin as well. However, these don't actually look updated for the quarter. Oh, maybe the last one wasn't either. Oh, that's a shame. We do have the income statements though. The revenue is updated. That's to June. But I guess we have to wait just a little bit more. I wonder if their segment and KPIs are updated here. So we can break out their US wait, let's go to full. Let's do customer counts. Billings as well. That's going to be insane. Total performance obligation, net dollar retention. Yeah, these are some things that I want to take a look at. So let's hide these really quick and just take a look at their customer counts. Okay. This is unbelievable. Very, very exciting. On top of that, whenever we add in billings and total performance obligations, we'll hide this for a sec. This is crazy. They are not only just growing, but they're growing at a faster rate on billings than they are on revenue, which means that they're going to accelerate even faster into the future. By the way, this is Fiscal AI, by the way. I do have a partnership with them. So, disclaimer, but there is a link in the description, by the way, if anyone wants this tool. It's unbelievable. But let's look at net dollar retention, because this is actually crazy. This is the amount that a customer is not only like if they have customers that are coming onto their platform and sticking with them, then their net dollar retention will be at 100% if they keep up those contracts. But if they come back to Palantir and say, hey, you know what, we actually want to extend this contract, we want to employ it to more of our customers, we want to deepen this relationship, then you have a positive net dollar retention. Okay, so not only are customers sticking with Palantir, but we can drag this out as far as it's gone. They are coming back, and this sort of hit a bottom here where the stock price also hit a bottom, but you can see why the market is getting excited is that this return to potentially 130 plus net dollar retentions on the highest amount of customers at, growing at a rule of 40 of 94%. Like, it is all going well right now. That is exciting. Now, I understand the valuation is high, and I don't think I'll be taking part in it right now. But if there is a large sell-off, just broad-based in the market, or scares or something like this around Palantir, it could be the opportunity that we need to get into this stock at a better valuation while still taking advantage of one of the fastest and highly profitable software businesses that's also doing it with zero debt. So, you have healthy fortress balance sheets that are growing, stronger customer relationships, better technology, and the macro as artificial intelligence gains more use cases, that actually gives Palantir more use cases. So very, very exciting. Oops, I wanted to just look at the thing. If we have it. No? Okay. Yeah. Wow. Let's look at diluted EPS, because someone said it was flat year over year, and I actually didn't know if that was true or not. I can't imagine it was, but yeah, it wasn't at all. We went from 6 cents to 13 cents on a diluted EPS basis. Crazy. Let me just take away that. Yeah, I mean, it's a growing business. Very, very fast growing business. But essentially, I'm not going to be making a position today. I am watching it, but like, you know, we're going to open up, and this is going to be in no time a $400 billion business. That's expensive. So if I want a company that's going to double, it has to go from 400 to 800 billion. That's hard. It's possible. And if they continue to expand their growth rates, they'll hit that very quickly. You know, if they continue to expand margins, increase net dollar retention, if you're a believer in all of those things, then I wouldn't even feel bad about holding this company at this valuation. That would be interesting. Okay, ladies and gentlemen, that is it from me. However, I will be back tomorrow morning for Shift 4 earnings, maybe some Lemonade, Pfizer, those sort of names. And then in the after hour, or in the tomorrow after close, AMD, SMCI, Upstart, Toast, Copang, Open Door, those sort of names. We'll be probably listening to the call of AMD while also looking closely at Upstart. I think that those are the names that will have the strongest correlation to the growth rates that I'm expecting from my portfolio. If you guys like this sort of content, hit the subscribe button down below. That's all I ask. But until next time, bye for now.